Can you guess which county in Southern California is not behaving like it usually does? We are seeing levels of inventory increase fast in one particular county. We're going to run through the single family and multifamily numbers, median home prices, and more in the Southern California housing market report. Okay, no goofing around. We have a lot of data to cover. Let's get started. Grab your cup of coffee and let's go. First things first, we are looking at second quarter closed sales. I want to see what the heck happened in Southern California for single family homes. And well, what's interesting is no surprise, the actual closings are flat. In some cases, we're actually dropping year over year. For example, in San Bernardino, we have 4755 last Q2, and then we're down to 4399. Now, what's interesting, you see this dip back here, that's COVID. So COVID manifested in the closings in 2020 in Q2. So we see that big drop. In some cases, like Los Angeles, we're above where we were back then, but in some, we're not. So you can see, again, San Bernardino, we had 5,440 closings then, and we are below the level of closings that we had during COVID. So lots more progress to make to get to a more normal market. And don't forget, if you subscribe to our newsletter, you get to play with these numbers. You can look closer at individual areas, etc. You're going to want to, and you're going to want to keep tracking this. All right, moving into the monthly data for June for the counties we cover. So we have sold, properties under contract. That is buyer demand. They wrote offers, properties under contract, and new listings, that's seller supply. So if you've been watching these, you see the trend that the number of new listings is down significantly. We are up in Orange County year over year for the number of new listings. We have to see if that trend is the same in other spots in Southern California. We can see that closed sales are down, and we can see that pending sales are up slightly year over year. But these numbers do not compare at all to where we were in busier times. Now, June of 2020, we had COVID still in place and affecting the real estate market, but it was actually starting to heat up. And it was by July, we were working with a buyer back then, that there were multiple offers on properties. And you can see this gap between new listings and pending sales. And that big increase, that year over year increase, this is a COVID under contract, COVID escrow increase right here. And we had the same thing in 2021. What happened in 2022? Why did it drop? Well, interest rates went through the roof, and we've been enjoying those lovely high interest rates ever since then. Los Angeles single family homes, we actually see a pretty big increase year over year in the number of new listings, but our pending sales do not have the exact same thing going on. Slight increase year over year in pending sales. So this gap, I like to track this gap and talk about this gap between new listings and pending sales. Now, in normal years like 2018 and 2019, you've had a big gap. There's a choice out there for folks who are writing offers. We can see that when 2022, when interest rates went through the roof, we had a big gap. It actually narrowed for 2023, and it's pretty narrow still for 2024. Riverside, we can see again another case where we have an increase year over year in new listings, an increase in pending sales, but we see that drop in the number of sold properties year over year, and that means that demand was lower. So basically, pending sales become these solds. So if we see that there was a drop in the number of properties that sold for the month of June, that means the demand was lower in the previous months than was typically normal. So that is interesting to track. And we saw the quarterly numbers that 2024 was having a tough time. San Bernardino, new listings relatively flat, slight increase in number of pending sales. We're still a long way off from where we were in normal years. Ventura is always all over the place. We've been seeing numbers way up and way down. We are seeing something unique in Ventura, and that is we continue to see an increase year over year in new listings, but we've seen a decrease in the number of properties going under contract. So the increase in interest rates and the high prices causing fewer homes to go under contract in Ventura year over year, and we're consistently seeing this. San Diego, we can see a similar trend, up slightly year over year, and an increase in the amount of inventory and new listings year over year. So generally, inventory is up for single family homes, and pending sales up slightly, but again, nowhere near normal levels. Diving into the multifamily numbers, you said you still wanted them, so we kept them in. We asked you to tell us in a previous video when we left them out, and we can see that the new listings are up and pending sales down slightly. Pretty flat, actually relatively consistent in the number of pending sales, just seeing the new listings all over the board. Tough for properties to pencil when money is 7%. That debt service is eating up cash flow, so that is affecting values theoretically, but we're still seeing properties sell. LA up slightly for inventory, and number of properties under contract up very, very slightly. LA unique, during COVID, they had their eviction moratorium in place for a very long time for folks who were affected by COVID not paying rent. Riverside tends to be a more affordable market for investors. They tend to get a higher cap rate when they're buying here. We can see inventory is pretty flat and pending sales is up year over year. Not much going on, nothing crazy to write home about for multifamily. Increase in San Bernardino in new listings, flat on number of properties going under contract. Another market that tends to be more affordable, higher cap rates. So interesting to see how flat it is for sales. Ventura always all over the place. They've got their 10 new listings and only one went under contract. And then here we go in San Diego, up year over year for new listings, down slightly for pending sales. We're seeing it in the single family and the multifamily market as these interest rates continue to stay where they are. It's making it tough for sales to happen. Theoretically, we're going to see some cuts to interest rates sometime in the future, the Fed fund rate, which will trickle down theoretically into mortgage rates. So we'll just have to keep watching for that and then see what it does to the numbers. Time for some median home price madness, looking at OCLA and Riverside first. And first thing to point out is that we are up in all of the counties in Southern California month over month, except for Riverside. So Riverside saw a slight drop from May to June, and we're still above the previous records that we had in 2022, around April or May, depending on where you were. So we're still above those, but it's heading the other direction for Riverside, and we'll have to see what happens for OC and LA. Now, year over year, we're still up, and we're in very positive territory in most cases. Orange County, almost 14% year over year, unsustainable. Look at that, 1.223. That's the median home price in Orange County right now. LA up 6.6%. Riverside is up 2% year over year. With inflation where it is, actually, that's a decrease in value year over year if you factor in inflation. So interesting to see that slowing in the median home price year over year percentage. And if you remember, if you were watching these, we were negative for a while when we had this big run up in median home price, just as interest rates were getting high, and then median home price dropped when interest rates started to go through the roof. So it's taken a while to recover to those levels, and we could be back to those levels. Looks like Riverside maybe next month. San Bernardino, Ventura, San Diego up a little more significantly month over month. And this is typical. We see this happen into the summer where we see the increase month over month in the median home price, and similar to where we are above the previous records. Now, year over year, San Bernardino up 7%, Ventura 2.6%. Another one that if you factored in inflation, that actually would be not an increase year over year. San Diego is up almost 10%. That's definitely up year over year, factoring in inflation. So that is what we're seeing in the increase in median home price. Remember, Riverside being the only one that's down month over month and seeing bigger increases in these counties. Gonna have to keep tracking to see what happens. Could get interesting as we get later into the summer. If you're digging this data, you're our kind of people. Don't forget we're real estate brokers based in Southern California. Don't even think about buying or selling without talking to us first. Covered a lot of ground, got more to go. Looking at the Altos Research Reports, starting with Orange County, I want to look at inventory. There's something interesting in here, and that is we're starting to see an increase. You may be hearing about that in the national news. We're up for the amount of inventory in Orange County, and nowhere near more normal years. We're still at around half of what more normal years we'd have at this time of year. But look down here in the market segments, and this is where it's important to see when you compare the new versus absorbed, we're seeing usually, and we've been reporting on this and showing you where the new inventory would be much lower than the absorbed inventory, which meant that that was actually eating up inventory, is decreasing. But now we're starting to see the absorbed numbers being lower. So we're seeing a slowing in the absorption rate of the number of properties. So this could potentially lead to some price reductions in the market. We'll have to keep tracking this and see. Things are still moving quickly for the two bottom quartiles. We've got 2 weeks if you're in the bottom quartile and 3 weeks if you're in the second quartile. So it's still moving quickly, but we're starting to see a change in the new versus absorbed. We'll have to keep watching this and continue to track this inventory number here to see the total effect on the market. Los Angeles has that increase. They're actually up year over year, basically pretty close to where it was in 2022 when we had the big run up in interest rates. Not again at 2019 levels, but some of the higher level of inventory we've had in the past few years. And this is one with the new versus the absorbed. We're seeing higher numbers for absorbed. We were seeing that in Orange County, and we're not seeing that there now. But things, again, at the bottom of the market moving relatively quickly in Los Angeles. Riverside inventory is up. It was a slower climb to these levels and again matches around 2022 like we saw in LA. And a similar case with the absorbed versus the new. The absorption rate is still higher than the number of new listings. So it looks like OC was the outlier so far looking at these different counties. San Bernardino, relatively quick turn in inventory levels, almost exceeding 2022. And new versus absorbed, still absorbing those properties quickly. What's been interesting to see in San Bernardino is that the days on market, 56 days, almost 2 months, that is the same at the lowest quartile and the top quartile. Usually you don't see that where they take the same amount of time. Usually the bottom quartile is gone like that and the top is the one that takes the longest. So interesting trend. Ventura inventory ticking up, new versus absorbed. We have a few numbers that are pretty close together, reversed. The top and the bottom, but look at the bottom quartile, 14 days, still moving along. San Diego inventory turned has gone up and new versus absorbed, everything except for the very top, those numbers are close together. There at the top, the rest more being absorbed and stuff moving quickly. So interesting trends and interesting to see Orange County standing out now. We've seen the dramatic increase in median home price there and we've seen inventory suddenly turn there. I guess people seeing that they're getting more money for these properties, so now they're coming to the market. So as you can see, inventory is increasing in Orange County. Are we starting to see a slowdown because prices have gone up so much? Let us know what you're seeing out there in your market right now. If you want a copy of these charts and want to take a closer look at the data, subscribe to our free weekly email newsletter and we'll send it right to you. The next thing you need to know is in this video right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to hear from you.